So I want to start by talking about what's making news this morning, which is Oracle shares are down. We just had Rishi Jaluria on talking a little bit about Oracle's value proposition against other hyperscalers and broadly how these neo cloud companies are going to look to compete against the traditional cloud providers. And the argument that he made, which I think is what they'll say too, is that look, we are specialized in AI workloads. In Oracle's case, they say, well, it's a bit of a flywheel, right? We've got the cloud, we've got the applications, we've got the database. My question for you is, do you think that is a viable value proposition? Do you see these neo cloud companies even surviving in the long run against these hyperscalers?
So I think it's going to be a tale of two cities. First, in order to win in the cloud for AI, you need to have strong balance sheets. And some of the hyperscalers make so much money in their core businesses that they can fund this growth. The neo clouds have to continuously keep raising money, and so does Oracle because the cash flow from operations is not that high. So as long as there is this astronomous demand, extraordinary demand, and we're a supply constrained market, everybody is going to rise. Once the demand starts slowing down, it's going to be a problem. So in
Hmm.
the short run, as long as these companies can keep raising money, they'll be fine. But once the demand slows or that capital dries up, it's going to be a huge, huge issue.
Now, thinking about the ways that the financing could dry up, as you mentioned, demand is one factor there. And as soon as that starts to get worrisome, perhaps the debt markets won't be as generous. If we sort of think about the other levers that you think could dry up debt markets, what are some of the other levers that you think could have an impact on whether or not people are willing to finance these businesses?
I think it's also going to be, besides the debt market, how's the stock market doing? And can the market cap of the Magnificent Seven or the key drivers of the AI companies keep rising? And today, there is infinite supply of capital, not only in the debt markets, but also in the private markets. But it's all looking at the growth that is happening in public markets, and that money from the profits that is being made is recycling in to some of these places. So it's not only going to be the slowdown in demand, it's also going to be multiple effects that will be created as these public stocks start coming down in value because the growth slows. So both those things are going to affect. And
Right.
then the third thing I would say is, where is your differentiation?
Hmm.
And this is where we have seen the platform plays start bundling hardware with software. So essentially, if you're just going to be built on NVIDIA and third-party models, where is your differentiation? And as the market moves from training to inference, vertical integration is going to matter a lot. And that's where companies like Microsoft, Google, Amazon, and Meta are going to have a huge, huge advantage.
So, in short, what I'm hearing from you is it feels like the big will continue to get bigger.
Absolutely. And this on the infrastructure side.
Okay.
And a lot of the value is going to accrete to those people, but the story might be different as you move up the stack. And that's just what's going to happen in this market.
And so I think this is a nice segue then into an area that you have called cognition as a service, which is your focus. And look, it's not an acronym that the CAS acronym. I haven't really focused or heard too much about it. What is cognition as a service?
Yeah. So our belief is first and foremost, AI is just not a technology. It's going to be available as intelligence as a service. And we are calling it's cognition as a service. And similar to what happened in the cloud era with IaaS, infrastructure as a service, on the business layer with software as a service, intelligence is going to be available on demand. And using NVIDIA and the models, that's what is going to get provided to everybody. But then there are going to be opportunities up the stack. So essentially, once you have cognition as a service platforms which get built, you need data, you need
Hmm.
middleware and tooling technologies to build AI apps. And over time, the value will start accreting into AI native applications, but also what we call AI teammates, which are digital companions built on agentic technologies, which help humans reach superhuman levels. And
Hmm.
that market, you're not taking share from enterprise software, which is a $600 billion industry. You're going after the knowledge worker spend, which is 30 trillion a year. And if 10 to 20% of that moves to this AI teammates built on agentic technologies, that's a $3 to $6 trillion market, 5 to 10x of the enterprise software market.
Right.
So that's what is going to happen in the digital world. But in the physical world, the markets are even bigger. And that's where, if Cognition enters, you're going to have now digital companions in the form of machines and robots, which will complement and augment humans. So
Hmm.
that's where this market is heading. AI is just not going to be a replacement technology. It's going to be my digital teammate or physical teammate, which will allow me to do things that weren't just possible before. So we are very, very bullish on intelligence being available as a service. It gets packaged into what we are calling cognition as a service. And it allows us to enter an era of collaborative intelligence where AI and humans work together to
Right.
make humans 100x.
Let me ask you this. Is the business model then in this new cognition as a service ecosystem, is the business model similar to where software companies were going in terms of consumption based billing? Do you see new business models coming up? How do you think about that?
Absolutely. So I think when you move to cognition as a service, your pricing and business model is going to move into outcome based. And that's what we have seen with the model companies.
Hmm.
This is not going to be a per seat license. This is going to be, you improve my productivity by X, I give you Y. You improve my revenues by A, I give you B. You help me improve my operational costs by C, I'll give you a share of that. So
Hmm.
we're going to move completely to essentially an outcome based pricing model, and it'll be consumption based. It's not going to be per seat. So the companies have to just not innovate in order to do well in this era on the technology front. They have to also innovate on the business model front. And that's where they can leapfrog the traditional companies, especially the ones which are public. We saw that with SaaS doing it to enterprise software.
Right.
It will
Right.
happen again.
Right. Great. Well, Naveen, it's a great conversation. I want to thank you for being here, and we'll talk to you again very soon.